Hello guys, welcome to another video. So today is January 24th. So today we'll talk about in a wider scale, wider perspective about the stock market. Because recently, after last year, the stock market and the equity market was really good. And then some of us will be would invest our time and money in studying the stock market. But I will focus on the people saying that the stock market is really high and expensive, and that they're not doing anything, right? After 2017, we understand that if those were the people, they would say that, oh yeah, I missed the 2017, and it's really even higher, right? No, I'll explain in several points. The first thing first, is about I've talked about how valuation is different than looking at the price. If we look at the price or stock market or in an index that is going really fast, going up really fast, that doesn't mean it's expensive, okay? Because first, valuation is another thing. The price is one of the formula in determining whether or not it's expensive. Secondly, by our own eyes, watching and looking at a wave, let's say, or a speed of the price going up, is not quantified, right? Because some of us will think it's too fast, some may think it's too slow. The thing is, after we buy something at this price, will the future yield me a positive return? That's all matters, right? So one of the things I would talk about, I think, is the VIX index, volatility index. And the second thing, because most of you have requested, I've seen your comments, on Monday, I will probably make you a video, finally make you a video about how the interest rate cycle is, how it is correlated, directly positive and highly correlated with the bull market, with the economy. If that is the case, you can wait for next Monday, I guess. I will have to make a video, and the main direction will be going up, meaning the economy is good, meaning the stock markets, 3 indices in US, the properties all over the world will hit the historic high again and again. So in short term, it can adjust, it can set back, but in the end, it will come back up, right? So if you're talking about stocks, that's fine, you can speculate, right? But if you understand the bull market and the economy, for example, you're buying a house, you can't speculate. You just have to hold it. At least you don't want to buy it, you just hold it. Do not sell it, right? That is the main point I will address it on Monday, because I've been recording this topic I think last year already. I recorded it last year. So it's time for me to review that. So I think that is really similar to 2005 and 6, because the economy is really going up, and at that time, because that is exactly what I will talk about on Monday. Only because the economy is too crazy, so that the Fed and generally governments all around the world will raise the interest rate to make your life a bit harder, only because your life is too relaxed, and people use all their savings to do all kinds of speculation in investment. They don't want that, right? So that's why they have this action, raising interest rate. So if we have to compare, not last year, not 2013, not 11, is 2006 and 7. By the time when 2004, we have speculated the Fed will start raising interest rate. So in 2006 and 7, I believe in around 2006 and 7, early 2007, Fed has already raised the interest rate for more than 10 times already. And then the stock market kept on going up. That's exactly the point, right? So that is something that I will address in the later video. But if we look at the price, for example, with our eyeball saying that it's really volatile, we have to look at the VIX, right? But not compare to last year. Compare it to 2006. Then that's why we will not miss any opportunities. That is also a risk for not buying anything. For just waiting, you pay the penalty, you pay the cost, you pay the price for that. If you wait and being patient for no reason, for the wrong reason. That is exactly what I'm saying. So after watching this video, I would like you to seriously consider your investment portfolio. But if you still consider not buying anything, not holding any assets, even a house, then don't do it until the bull market is over. But if I am right now, okay, so you will see stock market will still go up for 20, 30, 40%, and the house market will at least, I think, 50%. And do not invest at that time, because that's your risk you have to take. Okay, then you have to patiently wait for the whole bull market to be over, and wait for the bear market to come, and wait for it to end, and then you can start investing again. But by that time, you're looking at the trend because the price is going down, right? You will panic. You do not think it's cheap. You do not think it's the time. So again, whether or not you trust your eyeballs or trust the math, okay? So lots of explaining to do, but that's my job for you. If you keep on supporting this channel, I will share my findings with you guys. It's not my intelligence, it's my research, it's my statistics, it's the math, it's the fact. It's not about me, okay? I'm the one is really we have lots of time to do research. That's my advantage, I think. So if you compare the VIX index, you see, oh, it's really low, right? So people really optimistic, people invest, so the stock market will explode, okay? The bubble will explode, okay? Will pop. No, because if you do so, you have been asking this question ever since last year, 1 year ago, right? So it's going down and down because we're not compared to 2014. At that time, it's still Brexit, Euro crisis, the debt ceiling, stuff like that, right? But if you have to compare, you have to compare to the cycle similar to this one, which is exactly 2006, okay? So you can see 2006, the lowest point is 10, right? It's almost similar to this. And then there's one big panic going on. That was the fire up of the subprime mortgage. People in the end ignore it because Fed has decreased the interest rate. That is the cutting interest rate. That is the real recession signal. And then we forgot about it. We said, oh, if you cut the interest rate, that means you want to make my life easier, right? But they want to make our life easier because they have signal and solid proof that we're doomed with that, right? And then, anyway, if that's the case, we have the final bubble is like that. Boom. The VIX index went down to as low as 8.6. So if you only compare to one signal, as simple as that, we have one year to go, and the VIX is still not minimized, not at the mean, okay? But that is sort of the second step. I think the first step is whether or not you will study the yield curve and also the interest rate. We'll talk about next Monday. That is the key of the biggest picture of the economy. And then you ask about the VIX, the non-farm data, the GDP, and then the index, the TA, technical analysis, and then which stock picking is the steps. If you do it bottom up, which I am a big disbeliever in this, because we don't have the time to do all this homework. 7,000 of the US stocks, 3,000-ish of the Chinese stocks, and 2,000 of the Hong Kong stock and Malaysian stuff. And you can't do that because Warren Buffett won't do that. Also, it's top-bottom approach, and it's what I know. If you want to be bottom up, you have to do quantitative analysis. It's not about stock picking, right? Then you don't have to really, you can ignore the non-farm data, stuff like that. Hopefully that a basic video like this will explain or at least categorize whatever those things in your mind, you can categorize them into solid proofs, and into another category is emotional, about is not quantified, okay? So the price is going up too fast, too high, it's not quantified, right? So and then the longer approach, because all we're listening in this channel is about our portfolio, our lives, our quality of life in the future, or our relationship, our loved ones. It's about long term, right? You won't do speculation in your relationship. That's not marriage. That's like one night stand, right? I assume that you doing your portfolio is not for one night stand. So we really have to align our portfolio to our lives. That's the key. So asking the wrong question like, oh, it's going up too fast, too quick. Again, what? You're asking this question for long term. So if that's going too quick, you will sell your house, right? That's not right, right? Anyway, hopefully I can categorize it and inspire you guys, inspire us to think more about long-term relationship, especially in your investment portfolio. I'll see you next time. Investing easy. Remember to like my Facebook page and subscribe to my channel. Bye bye.